Have you ever noticed how confusing money feels? Everyone's throwing around terms like stocks, bonds, ETFs, options, futures, and meanwhile, most people are just trying to figure out how to make their savings actually grow. Here's the truth. Nobody ever sat us down and taught us how to invest, but that ends today because today I'm going to show you exactly how simple this can be. If you can take out your phone and place an order or post on social media, you can start investing. So let's go.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work to improve the one thing that we can control, ourselves. Here at the Financial Mirror, it is not about the numbers and spreadsheets alone, but about transforming and educating you on money so that you can make smarter financial decisions. If this is the first time you're joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you're listening on Rumble, don't forget to follow the channel and like the video. And on any podcast platform of your choice, don't forget to like and subscribe to the podcast. So I hit this off at the beginning, but if you can order something off Amazon, you can start investing. I mean, I literally mean that. Most people picture investing as charts and suits and Wall Street buzzwords and all those things. But today I want to show you how simple getting your money into the market and starting to invest actually is. So the broker that I'm going to be using in today's episode is Webull, and I will provide a link in the description that you can navigate to go set up your account. It is an affiliate link, so it should give you the best deal possible out there for your Webull account. But you'll get set up, and we're going to walk through exactly how you can start to get your money into the market and officially working for you to make more money. So most people don't not start investing because they're lazy. It's most of the time they're intimidated or they literally just don't know how or where to start. There's a lot of lingo and this fear of losing money and all the news about recessions and inflation and tariffs and all that thing scares people, and it scares people a lot. But here's the thing. Doing nothing is actually riskier, right? Because when you have your money sitting in a savings account making very, very, very minimal interest at best. I mean, even some of the high yield savings accounts bounce between 3 and 4%. If inflation is higher than that, your money is losing value just sitting there. You're needing to grow that money. And so I want to show you today how you can do that and how simple it is, because investing isn't a casino. It's just ownership into the market. And when you own those little tiny pieces of real companies that are out there making money, you can start to make money off of that. And with many brokers out there, but today we're going to look at Webull, you don't need a finance degree to get started in the market. You just need a few minutes to sign up in this episode and you will be on your way. So maybe you think I should have started years ago. We've all had that thought. We all have. And what I don't want you to do is to tune into this episode and turn it off and not get started investing. You came here because you wanted to learn how to invest, and I want to show you the way it is. So start with what you can. First and foremost, that's what I want to say is start with what you can. For what we're looking at today and all the financial instruments that we're going to look at, I want you to know that even $20 a week, $20 a month even, can start to help build momentum. One of the best things about investing is it's kind of like working out. You get strong not by lifting once, you get fast not by running once. Show up regularly and you will make progress. So today you're about to show up and you're about to create your account and get started investing. The best thing you can do is finish. Don't stop, right? Start your account. Let's get started. Let's get investing and get you on the right path to growing your money. So let's first just quickly, and I mean quickly, talk about what it is that you are investing in. What is it that you are investing in? Well, there's a few things that we're going to look at, but today I'm going to focus primarily on ETFs because ETFs make investing simple. It makes it really simple. So imagine owning like tiny pieces of hundreds of companies, from the Apples to the Amazons to the Coca-Colas, all in one little basket of investing, right? That's what an exchange traded fund is. It is just a basket of all these major companies that make these up. And I'm going to show you a few of those just to kind of give you an example. But why these are so much better or easier, let me say, I'm not going to say always better, but easier to get started in the market is that you don't need to pick which company is about to have their next biggest breakthrough. You don't need to pick the next AI market player that's going to drive the market up, right? You don't need to pick the next Nvidia or the next Tesla or the next Apple, because whoever's managing that exchange traded fund is doing that work for you. They're doing that work on your behalf. So we're going to look at some of these today, and I picked 4 to really look at. But this is VOO. This is the Vanguard S&P 500 ETF, so being managed by Vanguard. And this is on Yahoo Finance, and you can just navigate. And I'll put links to all this in the video description here, or the podcast description. And by the way, if you're listening to this on a podcast, the visuals go a long way. So tune in on YouTube or Facebook or Rumble or wherever, and check these out. But this is just quickly how you can look. On this section, you can see holdings, top 10 holdings making up about just under 40% of total assets is Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Google, Tesla, Berkshire Hathaway. I'm sure you've never heard of any of those companies, right? Of course you have. And that's what you're investing in. You're investing in an exchange traded fund that is invested in all of those things, plus roughly 60% of other assets out there, right? That's the beauty of it. The beauty of it is like a shopping cart, but instead of buying one little item at a time, you're buying the whole cart. You're getting the whole shebang all in one spot, okay? So that's step one. And I wanted to start here before we even get to the account, because the account's the easy part. I want to give you some insight into what this could look like and how to feel a little bit more comfortable getting into investing. That's why I wanted to start here. I know investing can be fearful. It can be you're risking a little real money, right? That you're working your hard-earned hours for. But when you're investing in kind of spreading the wealth across all these major companies, major players in the market, you can start to see that it may be a little bit easier to digest. So I'm going to look at 4 today, and we're going to start with VOO. But my goal here today is to not sell you on one or the other. They're all great to invest in. They're all great exchange traded funds. And I would tell you that it's really up to you on what about each makes it a little bit more appealing to you. And I'm going to show you a couple things that you can look at just pulling these up. But just navigate to the link in the description. You'll pull up each of these. But the first one we're going to look at is VOO. And I'm going to head to the performance tab right here on the left side. And here's what I want you to look at when you're looking at these. You can see right here, and I hit the little drop down under annual total percent history. And you can see since 2011, there's really been 2 down years, and it's 2018 and 2022. 2 down years in the market since 2011. Otherwise, your money in this specific exchange traded fund, VOO, you would have had a few years with 1%, right? 2011 had 1%, 2015 had 1%. But other than that, I mean, I think 12% is the lowest, right? So pretty good returns. If inflation is sitting around 2 to 3%, you're busting out 9% over inflation that your money's growing. But you can see right here the category and VOO, and you can see that this is really and truthfully competing across the category. Like in 2015, VOO was positive on the year, and the category was negative by 1%, right? Positive only by 1%, but better than losing money. So that's just one little spot that you can look at for annual total percent history. So this is VOO. Like I said, 2022 and 2018 were both down. If we go to Schwab US market So ticker is SCHB, and I'll show you how to find those once we get over to Webull. But looking at this one, once again, this one goes all the way back to 2010, but still 2 down years, right? 2022 and 2018, even 2015, the one that was negative last time, still was positive, barely broke even. So another great investment there. SPY, SPY, another good one, right? This one, you have a lot more history and a lot more data around it. So .com bubble right here, 2000, 2001, 2002. See some down years there. 2008 for housing market, 36% down, right? But really, if you're just kind of like comparing apples to apples here, starting around that 2011, you still only have 2018 and 2022 with down years, right? Still beating that 2011 category was down, SPY was up. And then the last one I was going to show you is the iShares Core S&P Total Market. And once again, got some extra data here, but that 2011 still beat the category, and 2018 and 2022 still down, right? So consistently, all 4 of these, same returns, same kind of general outcome, but maybe you're like, well, and I remember and what 2022 felt like. So iShares only was down 19% through that. SPY was down 18% through that. Schwab was down 19% through that. And VOO was down 18.19. Which one was lower? 18.17. I'm going to go with SPY because it maintained a better response to the market in that 2022 timeframe, when markets made a really strong pullback, right? So just a way for you to look at it and say, you know what, I'm going to go with that because of that reason. Come up with your own reason. That's just a reason that people may look at one over the other. Maybe you look at another one, maybe like, okay, so since 2010, the highest this one's ever seen is 32%. The highest Schwab's ever seen is 33%. The highest Vanguard's ever seen is 32%, roughly 32%. And iShares highest is 32%. So I'm going to go with whatever's the highest. Or maybe you want to flip over and say, you know what? This one has a 5-year average of 15.68. SPY has an average of 15.20, which is 15.68 is better. Schwab has a 15.73. So now Schwab's the best, and 16.43. Now VOO is the best, right? Maybe you go that route. I hope you get my point. My point is that you could choose any of these and you're probably going to be fine. But one of these may gravitate and land with you better. Maybe you just like the sounds of Schwab over Vanguard or SPY, or maybe SPY just sounds cool. I don't know. But pick yours and roll with it, okay? So that is kind of step one. Step one is being able to quickly and effectively pick out what you're going to invest in. Okay. Quick overview of that. And now I want to dive into the actual setup. So step one to getting started is you navigating on a computer. You can do this on your phone. It's going to look slightly different. I'm doing this on a computer, but it'll look slightly different. But the biggest thing is that you head over to www.webull.com. Go to Google, figure out your lineup there, type in Webull. If you're on App Store, Apple, Google Play Store, whatever, type in Webull, and it's the Webull app. The logo like that. This little Webull thing. But you just hit sign up here. There. Sign up. So you click right there and you hit sign up. Now, here's the easy or hard part, however you want to say it. You have to type in your phone number and put in a code and hit next. Hit I agree and hit next. That's it. Enter all your identity stuff, right? Which is like your name and your information around like all of your personal information, name, address, blah, blah, blah. And you'll get signed up. Okay. So that's really step one. So once you're logged into the account, there's a section right here that, and this is on the Webull.com. there's a section under my accounts that says like you want to be able to have transfer accounts to transfer money in and out, right? So when you come to this section that says transfer money in, you'll be able to link a bank account. You've got to link a bank account. You've got to link a bank account to be able to start to invest, okay? But once your deposit, it makes it into the account and you transfer some money in there, you're golden. You're golden. And at that point, you'll be able to start investing. Now, how do we do that? How do we do that? So now that you got your account set up and you're ready to get started in putting money into the market, head over to Webull.com and we'll get started from there. At this point, you should have your account set up. You should have money in your account and you should be able to see that. And I'll show you where you can see that to make sure before you get started buying. But you're ready to go. At this point, you're ready to go. So you can head over to Webull.com. And if you're on your mobile phone, that's totally fine too. Just open up the app and get logged in. You'll still see some of the same prompts, even if they don't look exactly the same. You should be able to follow along and all the same features are there that we're going to look at today. But if you are on the website, head to Webull.com and hit Web Trade in the top left right here. That's going to bring you to a page that looks like this. More than likely, you're going to be at a watch list page, which is this little heart at the top here. And you're going to have probably an empty watch list, right? I've gone ahead and added the setting, all the watch lists for the ETFs that we looked at when we were on Yahoo Finance. But you can simply just add, if you would like, the 4. If you want to do this now or later, or maybe you're waiting for your money to deposit and you want to go ahead and get this set up, you can add those in here. But on the right over here, you will see a quote page that will allow for you to start trading. Now, I'm going to head over to the trade page right here. But what I'm going to show you, it allows me to edit and move things around, unlike the watch list page. So you can do everything that I'm about to do from the watch list page just by using the side quote bar over here on the right. It's better for me when I use the trade page. So whenever we get over here, you're going to see I've got my watch list set up right here. I've got in the middle some just key statistics. Once again, it shows you a lot of that same information that we saw before, like our 1 year return, cumulative returns, that 15.9, SPA is 15.82, Schwab is 15.71, ITOT is 15.73. All of those things. This is just some more good data for you to look at. But now you're ready to get started into the market. And the reason why I recommend Webull and that I think that Webull is a great spot for people getting started is fractional shares. And more brokers are getting it now, but I think that Webull does a really good job of allowing you to invest with fractional shares. So the key to this is to first, in this top bucket, go ahead and from your watch list, you can just click and over these, and this will automatically change if all these numbers are the same. So I've got all ones. So everything, these are all kind of like connected. But if you don't see this, or you're on that quotes page on the original watch list, just type in up here what you want. So if I was going to do SPY, I could just do that. And now I see SPY, and everywhere across the board, I see SPY, right? That's great. So now we're ready to buy shares of SPY. Now, where do you need to look to see how much money you have? Well, down here in the bottom, you'll see where it says buying power. So this nice little test account that I've got here has 11 cents in it. I'm not doing much with 11 cents. I don't think that they're going to let me buy 11 cents worth of SPY. So what I'm here to tell you is that if you have simply $5, $10, $20, $100, or even $1,000, what you need to do is make sure you're on buy, because we are always going to be buying and holding. That's just the philosophy that we're holding here. This is not some day trading, swing trade, quick turnaround thing. This is buying and holding and letting that money grow. So we're going to have buy right there. For our order type, we're going to select market. That just allows for you to put it in at the current price and instantly get filled when the markets are open. And then the next part that I want to show you is right here, this little button that says share. I can click it and it changes to percentage, or I can click it and voila, it changes to dollar, right? Changes to dollar. And look, the minimum purchase amount for a fractional share is $1. So you can literally get into a position with $1. So start investing. Start investing, even if it's $1 or $5. SPY allows for a $1 minimum investment. These other ones could be different, right? Depending on what it is. They could all be different depending. So anyways, if you've got $5, throw it in there, right? That's going to allow you to buy fractional shares of this, as long as this is on market. You need to make sure this is on market, right? Order type needs to be on market to do fractional shares. But $5 would get me 0.00755 tenths of a share of SPY. And that money will grow. That money will grow. And money, when the price moves, you'll make money. When the price moves in your favor, you'll make money. But you can do that with pretty much all of these. I believe allows you some form. Yeah. So VOO is $1 minimum. Sorry, I can switch back. $1 minimum for Schwab. Market for ITOT. $1 minimum. Yeah. So pretty much all the same. The difference is though with Schwab, $5 is going to get you 0.19478 because it's only $25.58 a share, right? So keep that in mind. Hey, here's you another selling point. I see Schwab's only 3 out of 5 rating on Webull. And then ITOT is a 3 out of 5, but SPY is a 4 out of 5 and VOO is a 5 out of 5. Maybe there's you another weighting. If you were in between like SPY and VOO, maybe one of those shifts you in the better direction. But congratulations, like you're officially an investor. Like you just invested, right? If you follow those instructions and you place the order, right? And you did a market you switched this to $5 and you had $5 buying power and you placed the order, right? Because right here, when it's time to buy, it'll say buy, 0.00822 of VOO for this case. It'll say buy and you buy it, right? The one thing to keep in mind is that you do need the market needs to be open to be able to buy these. So, 9:30 to 4 Eastern time, kind of that ballpark. You need to be at a computer or on your phone to be able to buy these fractional shares. But you're officially an investor. At that point, you are an investor. You have money in the market. You will be able to track and see that money grow. At any time, you could sell a certain percent of your shares and you'll have real money to withdraw, right? That is the feeling of investing. Like that's all it is. Is there a tiny little adrenaline rush? I don't know. You tell me. It was $5 and you got some tenths of a share, but you own a piece of hundreds of companies now. And when those companies make money and they grow and more people want to invest, you make more money. And you did that in just a few minutes, right? You followed along and you did that in a few minutes. But here's where most people drop the ball. They buy once and then they never follow up. They never keep buying. Webull does have the opportunity for you to do recurring investments. Automatically, it'll keep buying. It'll keep depositing. It'll keep buying. And it'll continue to what they call dollar cost averaging, which is just where you buy a little every month, no matter what the market's doing. You just keep buying a little every month or week or day, or just the idea is that as price moves up and down, you're kind of just averaging and keeping a pretty average price. But you kind of smooth out the ups and downs and build some momentum to grow your money. But think of this like a financial gym membership. Every deposit is just another rep that's going to build that financial muscle. So you're not chasing luck. You're chasing financial freedom, but you've done it. Like if you follow those steps, if you follow this video, you've done it. You understand ETFs. You've set up your Webull account. You bought your first investment, and that's huge. But that's not the end. The end is where you start your investing journey, where you continue to invest. You continue to put money into this account. You fund this account, and you buy more and more shares so your money grows more and more fast. So I've dropped in a link in the description. It gives you the best deal when you sign up. So sign up and start investing today, because a year from now, you won't remember what you were afraid of. You'll just be glad that you got started investing. So thank you for tuning in. Thank you for checking out this episode. Hope that you are getting signed up and getting started today. But I hope this episode helps you continue to allow your hard-earned money to work for you one step at a time. So till next week, continue improving the one thing you control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.